If you are an investment vehicle specializing in miners, you have had an even rougher year. This makes you vulnerable to redemptions at the end of every quarter. And that vulnerability grows as the year goes on. So if you're a short bullion player, you're losing money this year. If you're a long mining player, you're losing money this year.
Two mining stock funds are experiencing redemptions and are liquidating their positions, according to Lanci's report. These sales have a profound impact on the market. He analyzes why they occur, and he speculates whether they are driven by liquidity concerns or fundamental differences. Let's listen to Lanci again.
We are in sell season. And nowhere is it more felt than in the mining industry. Now, sell season, which is really tax loss season. And I say it's sell season, but it's also buy season if you're short. But during sell season, you get liquidation of shares for one reason. People want their money back. They may want their money back due to poor fund performance. They may need their money back due to poor performance in another investment, forcing them to liquidate winners to solve the problem. But they need their money back. One thing is certain. In a year where interest rates have climbed to 5.25%, making money is both harder to do and harder to keep. In times like these, good assets get unfairly sold due to financial risk, not business risk. Put another way, the world is too leveraged, and as that leverage shrinks, those with the least amount of actual capital are forced to capitulate. I'm reminded of Warren Buffett's phrase about when the tide goes out, we see who's naked. Anyone invested right now who's not making money is licking their wounds. Some are regrouping, some are exiting. In past years, you would have been able to double down. Money was easy to get. Those days are ending. Money is expensive now. Therefore, you either manage risk or risk manages you. Now, why am I saying this? First off, Goldfix knows a small fund that played gold on the short side, gold futures, got taken out in the rally a couple weeks ago. However, this fund was so small, it was just collateral damage in the rally we had last month, due in no small part to China closing the arb by taking delivery. So we chalked it up to the usual fund blow-up. Nothing special. We didn't even report on it. But it came during sell season, or more appropriately, in this fund's case, liquidation season. They were buying as they were covering. If you are an investment vehicle specializing in miners, you have had an even rougher year. This makes you vulnerable to redemptions at the end of every quarter. And that vulnerability grows as the year goes on. So if you're a short bullion player, you're losing money this year. If you're a long mining player, you're losing money this year. And that's what we're going to talk about now. In a capitulation event, which we may be in right now, as investors sell everything not tied down either due to poor performance or a need for a cash infusion, those investments get liquidated before year end. Therefore, this is a good time for investors to consider buying shares of mines in which they already like the business. However, there should be no expectations of a hard and fast rally after this is all done. I want to be a little bit more specific for you now. What you are looking for is a pristine entry into a 10-year hold that will grow over time. This is why you must pick a business whose operations you trust. Liquidations that we're going through right now can certainly continue into the new year. And as rates stay high, you can also see these company stocks continue to languish. But the price of the stock is not the business. If you trust the management, you start to buy the company. Now, why am I saying all this? I'm not a mining person. I am a stock person now. I have been told by two independent sources that two investment entities in the precious metal space may be getting hit with large redemptions. My own reconnaissance after this suggests it's true. These are relatively small funds, but if a small one is getting redemptions right now, you can bet a larger one has also been getting at least some redemptions. There is a possible capitulation moment coming. It may have already come, but this could be one of those generational opportunities that the kids like to talk about. So All you have to ask yourself is, do you like the company? This is not a time to buy the worst house on the block because it's the cheapest. This is a time to buy the best house on the block because it is cheap. When money flows back into these assets, it will be quality buyers first. The selling that we have seen has been a result of people throwing in the towel all year on mining stocks, not necessarily individuals. Investment funds come in chunks. So at the end of every quarter, they get redemptions. I want my money back. I don't like the fund, which is fine. But there are people who want to sell in an even worse way that are being financially hurt in other areas. And those people will sell a little bit more aggressively. And I think we may be seeing that now. The rally in gold and silver recently didn't really do much to help those miners. And that's probably because there was supply right above the market being offered into it. So there are redemptions in the market right now. The redemption should end by December 31st. Time to start picking your spots if you're looking for an entry for a 10-year hold. Now, when we find out more, we'll tell you, but we do have a couple names that we will not share because of the confidentiality. How big? Let's just say both funds that I know of are under $1 billion being run, under $1 billion. So, and they're more than 250 million. So that's your size, between 250 million and $1 billion. I mean, I'm just going to give you that type of an answer. That's the answer that I can give you. They're typical of the industry. One fund is typical of the industry, meaning they just own miners. You know, that's what they do. Another fund might have some more complex strategies, like they may be long copper and long silver, but short gold. I don't know, but they have more flexibility in their investment. So that's the size of the funds. Oh, you know, I love to say that I'm an expert in this, but I'm not an expert in how much size or capital is allocated in the mining itself. I think your audience would know that better than me. But I look at these funds. I look at these funds not necessarily compared to other funds. I look at these funds as symptomatic of a problem in a community. Now, I don't mean the mining community. I mean in the investment community in general. I think as interest rates have climbed over the last year, what used to be free money is not free anymore. So now I guess it kind of dovetails into why they're selling. Investors start to redeem things that they're making money in, you know, and then when they do that, because they need money, and then when they do that, they start to redeem funds that they're not making money in to harvest tax losses. So with regards to how big they are relative, you know, $5 billion funds will trade gold and buy 5,000 contracts, you know, just to do it. That's how they play. You know, mining is really tricky. I don't know. I mean, if you're talking about mining shares, and I know that we are, a significant portion of this is mining shares, you're not talking about, you know, trading. You're talking about investing. You're talking about funds that hold, that sell themselves or promote themselves as, you know, long-term owners. And so that means the people that own these, have invested in these funds, probably have owned them for years. You know, I know that, put it this way, I can't tell you how big the funds are that compete with them, but I can tell you that in their niche, they're pretty well known. Now, I wouldn't say they're a household name, but I know them, and I'm not a mining person. So maybe in the mining community, it'd be like, oh yeah, I know who they are. So that's basically it. But so they're big families of funds, and that's why I'm concerned. So maybe you have one fund that's not so big in a big company. So maybe, you know, there's other funds that are going to liquidate. So you know, have to be careful of a cascading effect.
As we navigate the intricate paths of the gold and silver markets, the ebbs and flows of mining shares present a complex yet fascinating story. Understanding the nuances behind these fluctuations is key to making informed decisions in this dynamic landscape. Vince Lanci's insights shed light on the recent developments impacting these sectors. Remember, knowledge is power in the realm of investing. Stay informed, stay curious, and join us next time for more invaluable analysis and discussions. Thank you.